What's going on, America? It's Matty Loans, your favorite loan officer's loan officer, back with another video, and I can't believe a whole week's gone by. Can you? Well, I hope you're having a good one, because I'm out here sailing the high seas with me and Blackbeard. You see, I'm actually losing business to the internet and mortgage pirates, and we won't get into that this week. I wanted to take you on a stroll down memory lane with a new series I'm calling Remember When. And it's my goofy attempt to take this crusty, boring, mnemonic mortgage nomenclature and put it into some relatable terms that hopefully you can enjoy. And let's start with that classic movie, Pirates of the Caribbean, when that actor, and I believe this is the first one, Jeffrey Rush says to Keira Knightley, the code is more what you call guidelines than actual rules. And if you forgot about it, here it is.
Thirdly, the code is more what you'd call guidelines than actual rules.
What really rang true to me in this line was it's so much the mortgage business, because as a lender, we operate between rules and guidelines. And if that just sounds like a euphemism one to the next, here's what I mean. Fannie Mae and Freddie Mac are the backbone of the mortgage market, and they support 90% of the loans that are done today. And since they buy this paper from your lender, it's safe to say that they make the rules, not your bank, not your lender. Your bank or lender is really just the facilitator, the middleman that's originating this loan on a fee basis. Now, once that loan is closed, it's packaged and it's sold on the secondary market and usually purchased between one of those two entities. So it goes without saying, he who has the gold makes the rules. So when you're applying for a mortgage, it's likely your underwriter or the credit qualification process you're going to go through has to do with the rules of each GSE. Now, it's also important to understand that both Fannie and Freddie have their own rules. They're not uniform. They are similar, but they're not the same. But within the seller's servicer guide contains the credit, income, asset, and maybe reserve requirements are necessary for that loan to become saleable to either one of those two entities. So the seller servicer guide contains the rules, but that doesn't mean that your bank is going to follow those rules verbatim. It's up to that lender or that lending institution to decide what they're going to accept, because banks have what they call overlays or their own guidelines, which is really their interpretation of those rules. And it's the bank's way or the lender's way to offset risks. So guidelines may differ from bank to bank. So it's important to understand when you're walking the plank, just because one lender says something doesn't mean that that's across the board. And if you've ever had a non-conforming loan, well, they don't underwrite to Fannie and Freddie. They have their own ways to establish credibility. And if you had maybe like a hard money loan, well, you can kind of throw every rule out the window because you're getting a premium rate for either reduced or a different custom maybe determination of your qualification. So it's important to understand that guidelines are really a filter a bank or lender will use in order to make a credit decision. Now, there are some times where it might not meet merit verbatim to what those guidelines are with that lender. They may make an exception. Other times it may really come down to mitigating factors, credit score, or how much money you have in the bank or reserves. Other times it just might be a hard stop. But don't despair. You're not walking the plank without options. There's certainly options out there. And just because the credit market's tight doesn't mean it's absent of solution. There's plenty of lenders out there still, and there's always a solution for every request. At least that's how I believe. But I've been on both sides of the coin. I remember I had a client come to me, I don't know, years ago, after themselves being rejected by another bank, and we came in, welcomed them in, and said, hey, we can do this for you, not a problem. We don't have those overlays. Now, everything was great until rates came down and they decided they need to refinance, but let alone we're talking about the same client, the same loan, the same property, the same qualifications. And it wasn't that we couldn't support the loan, but our overlays had changed. And so as a result, we weren't able to do the loan. They were able to find financing somewhere else, and life goes on. So that's what I wanted to remind you of. There are solutions out there. Don't hang your head low. You're not walking the plank when you're going through a mortgage evaluation. It's just part of the process. But I bet you didn't know that pirates and loan officers have that much in common. And so let's leave you from another classic line from Johnny. Take it away, Johnny.
Welcome to the Caribbean, lad.
Well, folks, that's all I got for now. Did you enjoy that I put you to sleep? I don't know. I'll see you next week. Maybe. Take care.